This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia. Sonia, good morning.
Hi.
And Nigel is joining us from the NSE. Morning, guys.
Hi, Nigel. Good morning. Prashant and Nigel, it's been, a couple of good days, a couple of bad days. Thankfully, we are at the better end of the stick now. But Nigel, you're at the NSE, so good morning.
Well, morning, guys. Happy to be anchoring, actually, from the NSE. I started my career at the NSE, so a bit of deja vu playing out here. And, it looks like a good session is in store. So let's hope we can build on to the gains that we've seen in the last couple of days.
Absolutely. And I think, yesterday we got follow-up, and I think it'll be interesting to see if you're able to build on that in more ways than one. So let's just sort of start by telling you what you need to know as we begin another session. And I'll begin, as I always mostly do, from looking at where we left off things yesterday. So the market came off towards the end. I mean, we were off about 50 points from the day's high. It was at one point looking like it'll be a 200-point kind of a day, but it was 100-plus kind of points. 50 points off. But I don't think we should nitpick. It was 100-plus points higher day on day. And global cues, importantly, remain supportive as well. Not that that has mattered in any large degree in that sense, but S&P was up about 0.5%. The Nasdaq has been up about 0.75%. This is, of course, what happened overnight. And, the market in the U.S. kind of managed to dodge a bullet. And that bullet was, of course, the April producer price index numbers, which came in stronger than expected. But I guess, some of the past numbers, like the March PPI numbers, were revised lower substantially. So the market chose to ignore it. The 10-year yield, which actually perked up about 5 basis points when the data hit, actually ended down about 4 basis points to 4.4. The dollar index is very, very steady, closer to 105 now. And that also came off a little bit. You also had Fed Chair Powell popping up in Amsterdam, and he made some comments, which I think the market took very nicely. He essentially commented on the data which was released, which is the producer price index numbers, and he said that it was quite mixed and not exactly hot. He reiterated the sort of same statements he's been saying, that the first next move of the Fed is not going to be a hike, unlikely to be a hike, right? I mean, so naturally, perhaps looking at a cut. But he said, well, it perhaps is a slightly longer road to get to that 2% inflation number. Nothing he's not said before, but that sort of comment on yesterday's data, I think, is what cooled markets and calmed markets a little bit. The big one, of course, is the US CPI number later today out of the US, and I think we'll have to watch out for what that throws our way. So the consensus is about 0.3. If that is a big number, I think that can be kind of a market mover for the rates market and equities as well. Before that, you get the retail sales number as well. I think that will give us a comment on what the US consumer is looking like. Now, just to sort of recap the levels, it perhaps is a reiteration of what I've been putting out for the last 2 days. The price action needs to tell us that we're out of the woods. And, you basically have to look at some markers for us to be able to do that. So yesterday morning, we said that, the first kind of pit stop is the 40-day exponential, which was 22,272. Yesterday's high was 22,270. So we almost got to that 40-day and then sort of pulled back a little bit. So that, I think, keep an eye out on that. The 40-day exponential is still around those levels, but the 20-day comes into play now. And that, as of yesterday's close, now stands at 22,320, about 100 points away from where we left off yesterday. And beyond that, you look at retracement levels of the recent fall. So the 61.8 is 22,422. So basically, 100 points from here at the 20-day, and then 100 points from there, you get to the retracement, the golden retracement, the 61.8 of the recent decline. And of course, on the way down, we should not break the sort of low that we saw. 21,821 is the number. It's a very similar kind of setup for the Nifty Bank as well. We ended higher, but with a smaller advance as compared to the Nifty. Here we need to get above the 20-day, which is 48,169. And we left off at 47,859 yesterday. And of course, beyond that, you get the retracement level. And on the way down, the swing low that we saw, which is 46,983, about 47,000, by the way. That's a number that should not break and that should hold if we are able to build on what we've seen for the last 2 days now. Day before yesterday was that big 200-point swing from the low to the high. Yesterday was another 100 points. So let's see what we managed to do. Again, I mean, I said this yesterday, don't get very excited. At higher levels, there perhaps is going to be a little bit of selling pressure, which will continue to emerge. But what we're only looking for here is that the fall perhaps stops and we move a little sideways with intermittent bounces. The GIFT Nifty will come up on your screen, and that will give you an indication of how we're likely to start. So 60 points higher on the GIFT Nifty this morning. Sonia.
Absolutely, and I think the one thing that we've had relentless support from is from the globe, right?
Yeah.
Once again, you've had strong global cues. The Nasdaq, in fact, hit a fresh record high. So global cues have been very strong for our own markets as well, right? Yesterday, we saw a very strong pullback, closed above the 22,200 mark. And as I said, global cues are also very stable this morning. But the FI selling is something that continues. So FIs once again sold in the cash markets a huge amount of almost 4,100 crores in the cash market. So that is continues to be a problem pocket for the market. But there are plenty of stocks that I'm looking at this morning. Top of mind is what's been happening with telecom. Bharti Airtel came out with their earnings. Largely, the numbers looked good. The biggest positive was the strong subscriber addition and lots of brokerages coming out and, raising the target prices on the stock. In fact, Jefferies has raised their target price on Bharti to 1,590 from 1,300. So that is one stock in focus. The other stock I'm looking at this morning is Siemens. Very strong set of numbers. It was an EBIT beat across all segments. And the board has also approved the demerger of the energy business into a separately listed company. So margin expansion, strong quarter. Definitely that stock will be in focus today. And apart from that, Shree Cement, very good set of numbers also coming through this morning, post-market as yesterday. So that will definitely be another stock in focus this morning. So plenty of stocks to look at. The GIFT Nifty this morning is also suggesting a strong start. But just remember, the VIX has been surging quite a bit. So volatility can work both ways. We had one good day, one bad day, and you could perhaps burn your fingers both ways. So yes, this is a pullback. This can extend itself, but it's still better to be a bit cautious until you get a secular trend in this market. But Nigel, what are you tracking?
Well, that's right, Sonia. I think volatility is going to remain high. And, this market's not for the faint-hearted, at least in the near term, till we get that election outcome. For today's session, as the GIFT Nifty is suggesting, we're going to be starting in the congestion zone for the Nifty. The Nifty Bank will play out the weekly expiry as well in today's session. So that will add to the volatility, particularly in the second half of trade. And we have a barrage of U.S. economic data that's expected post-market as the inflation print. You have retail sales and other economic data as well. So lots to look forward to, even post-market, because a lot of economic data will be coming in from the United States. One quick point on the flows. The institutional flows, and I made this point yesterday, if that institutional net sell number doesn't go to around 1,500 crores, we're pretty much okay. Yesterday, the net sell number was 500 crores, and we ended high with a gain of close to around 100 points. So you don't want that net institutional sell number to go out of whack, to go to around 1,300, 1,500 crores on. As the screen is telling you, when that happens, then you see a bit of a pullback on the headline index. The VIX. Yes, it's been surging for the last few sessions, but yesterday after 13 sessions in which it went from around 10 to around 20, well, it cooled off from the high point of the day. So it doubled in 13 sessions, and yesterday as well it was higher. But as we saw the VIX cool off, you saw the Nifty as well moved off. So, that volatility index is in check, and you don't want it to run away, but it's par for the course, right? Even if it goes to around 24, 25, well, it's par for the course because we're anticipating a big verdict. And the IVs on both sides will be relatively higher getting into that event. Well, what did the FIs do? In yesterday's trading session, they unbound some longs. 20,000 long contracts were unbound. And short positioning increased by close to around 18,000 contracts. So the swing factor out there is close to around 38,000 contracts, which took the total net short positions from the FIs to more than 2 lakh contracts. Now, this is important because, you need to adjust for the change in contract size. So if we're looking at it on a like-to-like basis, now the FIs are net short on that 1 lakh as per the old contracts. It's appearing like 2 lakh contracts, but there's a change in the contract size. So that's what we normally look forward to, and that's precisely what's happened. What about the options data? 22,100 put, 22,200 put. Both of them did see some addition. And in a market that ended higher, you want to see the nearest possible put seeing some kind of writing, and that's what happened in trade. Which brings us to the levels. We're at the congestion zone. 22,300, that's the important mark, 2050 DMA around there. And a reference point on the downside will be around 22,000 odd, because that's where the 100 DMA as well comes in. The lower support is at around the 21,800, but 22,000, that's a mark you should track. The Nifty Bank is pat in the middle of those levels that we've been talking about, the 20 as well as the 100 DMA. So that's the broad range that the Nifty Bank is trading in. The stock that I'm looking at is Shree Cement. All its peers did see a contraction in EBITDA per ton on a sequential basis. Shree Cement went ahead and held it steady. In fact, there's a marginal increase out there. So the stock opens up in the green, but we'll await further clarity, and the management will be joining in at around 9:30 a.m. today. And just one quick point, since there's that MSCI rejig that's been announced, India's weightage in the MSCI Emerging Market Index, it's set to go to around 19%. 4 years or so ago, it was only around 8%. So there's a big surge that we see now. Then China, it's come down from around 43% to around 25%. Yes, it's in relation with the way the stock markets have moved on the whole, but you can't avoid India, right? Just take a look at the way we have outperformed, and that's why this big switch in terms of weightage on the MSCI Emerging Market Index. I just wanted to add that point, guys.
Okay, thanks a lot for that. Well, lots of stocks in focus. So without wasting any time, let's get you some money market views this morning. On the rupee front, Kunal Sudhani of Shinhan Bank says that the dollar index eased after an unexpected increase in the US producer prices in April amid strong gains in the cost of goods and services. Fed Chair Jerome Powell signals a strong US economic outlook, which may delay the interest rate cuts. Important levels to watch on the dollar index is 104.75, and if that breaks, then it can test 104.2. All eyes are now on the US CPI due today. For the dollar INR, 83.42 acts as a support, while 83.60 is a resistance level.
Well, on bonds, we've got Neeraj Gambhir of Axis Bank, who says that India's CPI inflation came in at 4.83% as expected, with core inflation inching lower. Government announced another buyback of 60,000 crore rupees for the week. He expects the 10-year benchmark yield to take cues from the US CPI data and trade in a range of between 7.05 and 7.15% for the week.
Okay, we have lots of stock-specific action to track today, and many on the upside, so we'll get to that in just a bit in our special segment. Top 10, we're looking at Bharti Airtel, Bharti Hexacom, Shree Cement, Siemens, Colgate, Patanjali Foods, Radico Khaitan and Oberoi Realty. That's on the back of positive news flow, and Cipla and Apollo Tyres are likely to open in the red post their numbers.